If your student loan is in default, here's the fear. Can they actually take money straight out of your paycheck? Yes, and they don't need to take you to court to do it. Here's what actually happens. This is one of the most searched questions on this topic right now, and for good reason. Millions of borrowers are in exactly this position. You're not missing something obvious. This only applies to federal student loans. Private student loans work differently. A private lender has to sue you and win a court judgment before they can touch your wages. Federal loans skip that step entirely. Under federal law, the government can order your employer to withhold part of your pay, and that authority overrides state garnishment rules in every single state. Here's the actual mechanism. A loan goes into default after 270 days, about 9 months, without a required payment. Once that happens, the whole balance becomes due immediately. The government's authority to garnish comes from 2 federal laws working together, the Higher Education Act, specifically Section 488A, and the Debt Collection Improvement Act. Together, they let the Department of Education withhold up to 15% of your disposable pay. Before any of that happens, though, you're entitled to a 30-day notice. And within that window, you can request a hearing to dispute that the debt exists, dispute the amount, or argue that garnishment would cause you financial hardship. That right is federal law, not a courtesy. There's also a floor. Federal law guarantees you keep a minimum amount of your paycheck no matter what. Garnishment can't push your take-home pay below that line. Now here's the part with actual timeline whiplash. The department announced this restart back in December 2025, with the first notices going out in early January 2026. Then, just a few weeks later, it paused the whole thing again, to give borrowers time to get into a new repayment plan before other loan system changes took effect in July. As of the most recent information available, the restart is expected sometime this fall, not confirmed as already happening. That date has already moved twice, so treat any specific restart date with some skepticism. If you're not sure whether your loan is in default, the document to look for is the notice from your loan servicer or from federal student aid. It'll say explicitly whether you're in default and explain your options, including requesting a hearing or entering a repayment or loan rehabilitation agreement. Your servicer and studentaid.gov are the places to check your actual status. So to recap, federal loans can be garnished without a court order, but only after default, only with 30 days notice, and only with a hearing right built in. That's the actual process, not what most people assume. Next video breaks down what a denied insurance claim actually looks like on paper. Stick around if that's useful.